Hello, are you able to see my screen?
Yes, sir.
Yeah.
Thanks. Shailesh, are you there?
Yes, sir, I'm there.
Yeah, can you do me a favor?
Yes, sir,
Take
tell me.
a screenshot of the people who have joined, maybe
All
after
right.
some. Yeah.
Yes.
So let me start. And before we start for the class 3, let me have a small recap of the class 2, just to remind you that, okay, what are the things we have discussed. So I will take only a few minutes to have a quick recap so that it will stay tuned. So we started last week about the importance of the knowledge, which is a key factor. If you know about the stock market, you can do anything with the stock market. You can earn a lot of money. And in order to be expert in the stock market, it is not like that you have to be qualified like a surgeon, but you have to learn little bit, apply the knowledge, and then learn from the mistake and go ahead. It needs to spend a lot of time behind learning the stock market, or regularly keep watching on the investment. We have gone through Benjamin Graham, who is the guru of today's the best investor, Warren Buffett. His philosophy is the buy cheap, and his philosophy is not to have the intelligent investor, in the sense you need to be a little bit disciplined, eager to learn. And then we discussed about the defensive and the enterprising, the aggressive investor, and how the aggressive investor can make a lot of money. We also know that the importance of analyzing a company and how to protect the money. And then we learned the concept of the bull and the bear market. Bull is the market is increasing, bear the market is falling down. We also discussed about the candlestick pattern. That means how in a daytime the price rises, or it can be over a period of a fixed defined time, for example 5 minutes or 15 minutes. It can be an overall increase during a week. That can be a weekly candle. So we have understood about the bullish and the bearish candle and how the graph looked like. And then we understood about the market capitalization, the difference between large cap, mid cap, and the small cap. The large cap are the large companies whose the definition of the market capitalization, number of shares in the market multiplied by the closing price per the share. And we also discussed the importance of investing in the large cap, mid cap, and the small cap. The investment in the small cap is quite risky, and also the profit can be quite high. And the safer investment is obviously large cap. The stock market is like something selling in the vegetable market, and there has to be agreement between the buyer and the seller. And how the stock market price of a stock goes up and down, what are the factors, the force, we have discussed about that. We have discussed the basic principle that these are the things, how much money we are going to discuss now. Okay, so that's how we have ended. Let's go now to the class 3. Okay, so a question is asked by many persons: how much money shall I invest in the stock market? So you have to first start from the fundamental question that how much money I am saving. You need to know. Obviously, saving is equal to earning minus the expenses. And there is a different benchmark. Everybody earns differently. The spending amount is different. And there is no fixed guideline that how much percentage of the earning I will spend, because it depends upon everybody's spending habit. the amount, the expenses habit. It may also depend upon the hobbies. Someone may have very expensive hobby, but whatever is spent, it depends upon the individual. The more amount of the savings you are going to have, the more amount of the enjoyment you can do at the later point of the life, because the amount which you are saving, and if you put in a compounding growth, then at the end of your life, that amount of money becomes a huge amount of money and you can enjoy. So a typical rule is that, suppose you are having 100 rupee or 100 whatever currency you are having as a saving amount, then that deduct your age should be in the equity allocation. So for example, if your age is 30 years, then 70% of your savings should be in the equity, that means in the stocks or the mutual fund, and rest should be in the debt fund or the safer fund, and that is almost a golden formula. Obviously you can deviate from the golden formula, but the concept behind is that as your age grows up and as you are going towards the retirement or even more and more beyond that, then you should move away from the stock market slowly. But definitely by that time you will see that amount of the money will be growing so much. Because stock market, obviously there is a risk and you have to manage the risk, and we will have it a separate session on how to do the risk management. It is something like that. You are now driving the car on the road. There will be obviously certain risk. So at the later point of your life, you may not be able to sustain certain risk. So slowly, you will be moving towards the debt fund. But this is more or less the rule. And if you are thinking that wherever you are not following the rule, then you are not sufficiently growing sufficient amount of the money. Okay. Now, how much amount of the shares you should buy? Now, I have given a typical example, say 5,000 amount Indian rupees. This is based on the assumption that the brokerage firm for which you have registered in the stock market, if at all you are willing to do, they get certain commission. Obviously, there are certain brokerage firms who do not go for a large commission, but I have seen many of the brokerage firms, the famous brokerage firms, they go for the 0.5% of the commission plus the tax component. So, for example, if a stock price is 100 rupees, and then whenever you are buying the stock, you have to pay 0.5 rupee plus some additional tax component. So approximately it will come some 0.7, I mean 100.7 rupees. So when you are selling the stock, you have to that time also pay the brokerage. Okay. So it is again some 0.7%. So in effect, 0.7 multiplied by 2, that means 1.4%. Typically, if the stock price is 100, 1.4, below that you cannot sell the security, otherwise you will be going for the losses. But in practice, you will see you will go far beyond that. Okay. Now there are certain companies, for example, I have subscribed. Initially, my brokerage firm was HDFC. We have also HDFC Bank as our corporate bank. So HDFC has a brokerage house. So I initially had, then they used to charge me that 0.5% and or 25 rupees, whichever is more. Okay. So if I buy, say, invest 1,000 rupees, then they used to charge me 25 rupees because it is less than 0.5%. Now, if you go for the Zerodha, it is not like that. I would like to know, show you that in practice sometimes this formula, also is meaningless depending upon. For example, you are basically buying something. Sorry, I will have to exit. There's some problem. Let it start and then I'll again start. Okay. So I will come back to show that this 0.7% how it matters. Now, what you can do is that sometimes you can put the money, if the market is going down, put the money in the savings account or put the money in the liquid fund. Liquid mutual fund, it is type of the debt fund, and even there you can earn the tax-free interest for a short period of time when the market is going down. Okay. If you are convinced about a stock, I will show you certain stocks you will be very much convinced. Then you have to buy in large quantity. But if you are not fully convinced about the stock, buy in small chunk of it, wait for some time, then again buy, wait for some time, see whether it is going or not. I have seen many people that, okay, they have some money, they've got some bonus, maybe from company, and they want to invest 100% of it into the stock market, which is a wrong step. No. So there are strategic steps that distribute the money, and then that amount of money distribute investing over a period of time. That is the right. Okay, let me see now it has come. Yes. Okay, now you can see I will go here one of the stock and will show you that. Okay, so we can see that if you see the growth of the stock, here we will start a growth of the stock between two things. The stock has been up by around 21%. And what period of time? The period of time we can know almost from the 30th March till say 9th of April. Okay, during this time, 30th March to 9th of April is not few days only. The stock is up by 21%. So you have crossed the barrier of typically the 1.4%. So there can be short-term players who will make money within few days. You will get, you will invest 100 rupees and then you will come out with a 21% profit, which is a huge profit. In the earlier class, I told that initially your target should be just make 3% profit per month. And you can see it is possible that within few days you can earn huge money. Okay, so let's go. So stock picking strategy, which shares to buy, which means you have to shortlist a number of companies, because as on 7th May, so by the way, have I started recording? Let me see. Yeah, sorry for that. As of 7th May 2020, there are totally 5,097 companies in the Bombay Stock Exchange, the large stock exchange in India. I have not taken the data for the National Stock Exchange. It will be a little bit less. Number of companies in the Bombay Stock Exchange is more than National Stock Exchange. But you will see out of which 889 companies are suspended and only 4,000 plus companies are eligible for the trading. Even there are more than 3,386 companies which are delisted. That means earlier they were listed, they could not perform well, and you know that the theory of the Darwin's law is also applicable. Only the fittest can survive. So in this stock market game, many of the companies could not survive, they got delisted. Now, you must be, wondering that now there are so many companies. How do I select which companies? And I can see that some of the companies are suspended. Even in future, they can become delisted. There is something bad about this company. So you have to know the subject of the fundamental analysis and technical analysis. If you can master in the stock market about the fundamental analysis and the technical analysis, you are going to be the king in the stock market. And fortunately, these two subjects, these two area of fundamental and the technical is not very difficult. Many of the finance guys already know about the fundamental. If in this call there are people or my colleagues from the commercial background, I need not tell them because they already know about that. But for the non-finance guy, I will touch upon the subject, but I will not explain in detail, but I will tell you that what are the parameters one need to look into, because my idea is that you need not go into the deep details of the definition of the parameters, but you need to understand how to use the tool effectively in order to judge a company whether it is good or bad. There are brokerage firms in the market. There are professional brokerage firms who already have been doing a lot of research on the companies. In fact, they have a lot of information, they have a lot of manpower, and they will go deep into the subject. They will be also in touch with the companies. There are official quarterly review with the top management of the companies, because investors have invested money and it is with their money the business is running. So the top company people, they have regular, at least once in a quarter, they will have open meeting, and many of the people will join in the conference call. There will be web-based conference call nowadays. People will join, the shareholder, and there will be analysts, and there are mutual fund investors who have invested large amount of the money from, they have taken money from the public. So the company top people are answerable to the questions, and based upon that, they must answer and explain their performance. Okay. And also, we will see that there are leaders in a particular segment. Segment means there are typically, I will explain more, but for example, some companies, they are pharmaceuticals background, some companies, they are infrastructure background, some companies, they are FMCG or fast moving background. So in that same segment, you will be seeing there are a large number of competitors, and those who are the leaders, I would advise pick up the leaders because they are the best. They have the past performance track, and how to track them also I will explain. I would strongly discourage because you'll be seeing there are a lot of initial public offers. That means when the first time the company is coming into the stock market, they will offer with the initial public offer, and they will offer some introductory price. Now in India, the initial public offer, the face value of a stock is always ₹10. Unfortunately, when they publish in the market, they will add some premium, and how the premium is calculated, it is depending on the complex valuation of the company. They will add some premium. Say they will, on the 10 rupee, they will add some, say 500 rupee and make it 510 rupees. Now this is very dicey because you do not know what is the right, who will be the, what will be the demand in the market. So many people, fall trap typically because you do not have any historical evidence and detailed data of the company. So it is better to have, avoid it. But some people can take some amount of the risk. For example, there is a airline company called Indigo. and Indigo came out with the IPO. And after the IPO, the stock price has zoomed like anything else. So many people, they are of the philosophy that catch the early bird. But I would always advise that most of the cases, even if you do it, study the company background and then only you can decide. Now, there are different kinds of the industry. The industry start at a very early phase, and then they go for the growth phase. The growth phase means they are typically the profitability, the earning, the revenues, they are rising. And then many companies go for a saturation stage. Okay. So whenever the companies go for the saturation stage, then thereafter you will see that they are not increasing. And then they often go into the decline mode for many reasons. Maybe that company is not able to go at the top, and therefore it is not a sustainable company, and they are losing in terms of the competition with the other better companies. So they are of the declining mode. So you have to see that what is the path during which you have bought the stock of the company. The best time is that buy in the growth of the company. I mentioned earlier that do not hold any psychological or mental attraction to the company. The company stock is not important for you. For you, what is most important is the money. Okay. So during the growth period, hold the stock, and whenever you see, because of the performance, that it is going into the saturation zone, come out of the company, make money and get out of the market. That's all. Now, going top holding companies from the good mutual fund, I would like to maybe show you something. There are, let's go. There's a site, money control, you can go. And I will go to any mutual fund and maybe here, let's go some good mutual fund. Axis Blue Chip Fund is a very good mutual fund. So let me go through that mutual fund. And here I can see the portfolio. Okay. Portfolio means what are the companies it is holding. And you can see that there are these companies. Okay, and it will also tell you what is the percentage holding. And this this percentage holding, that means if you in the 100% portfolio, how much is the percentage company? You can see Avenue Supermarkets, Kotak Mahindra, HDFC, ICICI. These top few companies, they are all from the finance. Then it is Infosys, which is IT company, Hindustan Lever is a diversified FMCG company. So these are the good companies, so which are performing over a period of time. So these companies will be coming into your radar. Like that, you can do analysis of a top, what you call, good mutual fund. Now, what is a good mutual fund and bad mutual fund? I have not also told you. But one of the things is that in the market capitalization, you can see that what is a good mutual fund. Anyway, this is not a mutual fund market, but you will be seeing that some of the mutual fund managers in different sites, it will give you what you call a little bit insight that okay, what are the top performing funds. There are many web pages which gives you. So now let me, I've shown you that how to do the filtering. Okay. Now about the quality of the company versus the price. Now we can see there are some excellent quality of the stock, and then there is a price associated with that. Some stocks are very expensive. For example, take example of Nestle. Nestle is a very expensive price. Okay, and it is a global company. You know, it makes chocolate. It makes in India Maggi. It's a very famous quick food. Okay, and there are some companies you will see that the price is very low. For example, if I see the Tata Power. Tata Power is also a very good company, but the price is very low. You will see Reliance. Let's look at the Reliance Power. Okay, what is the price? 1.7 rupees. Okay, is a very cheap thing. Let's see Tata Power. It is pretty cheap, some 29 rupees. Now, if you type Nestle, okay, it is around 17,000 rupees. Now, a question may come in your mind that why some stock prices are so costly and why it is so much cheap. Some people are often attracted by the fact that some stock prices are very cheap. It is available. I can buy in big number, but they can forget that the the price of a stock of a company is becoming costly because the demand is more. There is no right or wrong prices in the stock market. I mean, earlier I've told. So it is only a negotiation between the buyer and the seller. And if the seller sees that there are more buyers, they will jack up the price, typically. So that's how the stock market price goes up. And there are some high quality and high priced emerging blue chips. They are always there. But you will also find there are some turnaround stocks or even the middle quality, not so expensive stocks. That will be your target to catch. But you'll be also finding that in the past there are some excellent stocks, but they are still high price. So you have to understand and then avoid those. Okay. So now let us go to the fundamental analysis. If you compare the fundamental analysis and the technical analysis, you will see the technical analysis where it will tell you when to purchase a stock is much easier compared to the fundamental analysis. But nevertheless, I do not want you to go into the deep details of the fundamental analysis. Obviously, if you can go, you will learn a lot. But at first, the goal will be that to segregate between a good company and a bad company. That's the fundamental knowledge you need to have. Okay, that's why Peter Lynch has told, spend at least as much time researching a stock as you choosing a refrigerator. So think when you are going to buy a refrigerator, what are the parameters you look for? How do you decide that you want to buy this refrigerator? Whether it is from the good company or maybe the product which is giving you more feature or the amount of the service, the reputed service in the market. Your friends have told that okay, you are getting excellent service, or else it is at all service free. You need not get any service. Now, in order to understand the fundamental analysis, you have to have three-stage approach. The first approach is that what is the overall state of the economy as a whole? The second stage is that how is the industry or the sector under which this stock is falling is doing? And number three is that this particular company, which I am trying to focus on doing the fundamental analysis, how in particular is doing. Let's go one by one. The first, economic analysis. Uh, Economic analysis viewpoint, it is little bit 30,000 feet, but it is strongly coupled with the fundamental analysis. Take, for example, the current scenario of the COVID. Because of the COVID, most of the manufacturing industries are down. Most of the people, at least in India, they are jobless. In India, around 90% of the workers, they are from the non-standard companies. I mean, non-standard in the sense they do not get official salary. They just living on the day-to-day basis. Okay, and so they are sitting down. They do not have any earning. If people do not have any earning, then how can you expect to spend them? And if individual people they do not spend anything, then they will not be buying anything from the market. If they do not buy anything of the market, the companies they cannot keep on producing. They have to cut down their production. And obviously, when they will cut down the production, their profitability, their turnover will fall down. So this is typically a cycle. And if you see the economic growth, one of the important parameters is the GDP or the gross domestic product. I don't want you to explain what is GDP and etc., but numbers are available, especially how much GDP is growing for a country. That is interesting figure. India is one of the rarest countries in the world where the GDP growth rate was phenomenally high. That's almost 6 to 7%. But of late, it was found that last 1 or 2 quarters, it is growth rate is not so high. So GDP percentage growth rate or the gross national income per head or the per capita income, these are the important figures. Second is the monsoon and the agriculture production, especially for the country like India, but not, there are many countries like Japan and etc., where the contribution of the agriculture is, as a percentage of the GDP is very less. USA, Japan, they contribute almost 2% to 3% of their total GDP behind the agriculture, whereas in India, almost, I would say, 70% of the population work for only 14.8% of the total GDP. So for people, it is very important in India, the monsoon. If the monsoon does not come properly, then the agricultural production will fall down. When the agricultural production will fall down, then the farmers will not have money. Also, if there is an overproduction, then there is a surplus amount of the food in the market or the crop in the market. Then also the because there is a surplus production, then also the price of the agriculture good will fall down. So it heavily affects economy. Ultimately, if the farmers do not have money in their hand, they cannot buy the product. Okay. Now, like that, we have seen the industrial production. There is an official figure from Government of India. If it is falling down, in fact, for the manufacturing sector, last 6 quarters, the industrial production has been falling down. The service sector is growing up. Okay. Inflation. Inflation is another important factor. If the inflation goes high, then the value of the money over a period of time, we have discussed in the first class, is actually, it goes down. So if the inflation is high, then the purchasing power also will be lower and lower. When the purchasing power will be lower and lower, then also the company performance will fall down. If the company performance fall down, then the stock market of that association company will fall down. Interest rate. The low interest rate is a must for the economic development. You have seen that any improved economy like US, Europe, they are having low interest rate. And that's a good sign, because with the low interest rate, people can borrow. They can go to the bank or any financial institution, they can borrow. If the interest rate is high, then they will not be going for the borrowing. You want to purchase something, you want to invest for the house loan or anything, you will not be interested to go because the interest rate is high. When the interest rate falls down, people will be forced to do the consumption. Foreign exchange reserve, that is interesting. Foreign exchange reserve, it is something like that. A country does import and the country does the export. When there are imports, then the purchaser have to pay in dollar. Okay, so what do? They will go to the bank. They say, hey, I want to import something. I want to pay JL in the dollar, and the bank will go to the Reserve Bank of India. They will ask for the dollar, and then when the country will export, then they will earn the dollar. That means the dollar will come to India. Okay, so there is a difference between the spending the dollar, that means dollar going out of the India when you are doing import, and when you are doing export, then dollar is coming to India. Now there has to be a balance. The next point is the balance of trade. Now we have seen the country like China, they do more export than the import. They're heavily on the export. Now when you are doing heavy amount of the export, unfortunately India does not do. India's import is much more than the export. So when there is a difference, what will happen? You do not have the dollar in the reserve. Then whenever somebody wants to do the import, you have to buy the dollar. So you have to go outside India and ask for, ask for the dollar to buy. Whenever you are asking for the dollar, then the uh, the demand of the dollar. Hello, hello. I think somebody. Yeah, thank you. Okay, so whenever you are asking to buy the dollar, then you are creating a pressure on the buying pressure, and the currency rate falls. Hence, we can see that the Indian rupee typically depreciates, and then over it with respect to the US dollar. If rupee becomes stronger, that means that with the less amount of the rupee, you can earn the dollar. And in that case, the economy strengthens. So typically, the foreign exchange reserve typically protects. There are other functions also. You can study that, how the foreign exchange reserve protects. But these are the economic factors. I'd go for the budgetary deficit. Budgetary deficit is typically the deficit the government earns, the government spends. The government earns out of the taxation. There is a direct taxation, there is an indirect taxation, and government spends. They pay to the government employees. There are a lot of expenditure, including the capital investment. For example, they are making bridges, big things. They are making roads. There are a lot of government expenditure. For example, during the COVID time, they are giving a lot of money to the poor people. That is the expenditure. Now, if government income is less than the expenditure, what will be the scenario? The economy will be doomed. Many times it happens, but the government has to do the balancing. No? How does the government do balancing? So it will ask for the loan from the public, or it will go to the external world, and then it will go for the foreign loan. That okay, I am having less because my earning is less than the spending. So it is a sign of the bad economy. In India, there is always a fiscal deficit. That means the India, till last year, I think there was not much external foreign debt. That was internal foreign debt. But we can see also the economy grows with the foreign debt. For example, China. If you take example of China, China has large amount of the foreign debt. With that money only their economy was coming up so fast. But that also creates a pressure. If they cannot repay the loan, then the country will be at the risk. Okay. Then there is a domestic saving and capital output. If the saving is more, that means people will be rich. I've given two more factors. Employment, you will see a lot of figures in the paper. If employment goes down, the money to spend, money in hand to spend will go down, the consumption will go down, and then the company's demand will go down, their profit will go down, stock market will go down. Like that, if the tax rate goes up, then individual will have more burden on the tax, money to spend will go down. Like that, there are government policies. Sometimes government come with a lot of policies on the companies that, okay, this company cannot do like this. There are, for example, telecom companies, they will put a lot of restriction, and the telecom companies will be under pressure. Maybe government will ask for more money as a license fee for the telecom companies. They will impose a lot of restriction. So I typically avoid the companies which are restricted by these government policies. There will be political situation and international development. If you want to know, there is a website, tradingeconomics.com. You will get a lot of statistics there, and you can compare different companies. Okay. So when a particular industry grows, then there will be a lot of boom. And you will see, for example, now, the lot of pharmaceutical companies are booming because of the COVID scenario. There are a lot of medicine now around demand. And India being one of the largest supplier of the medicine, they are having large number of the, what you call, the pharmaceuticals companies. They are now all booming. It is not like that all the companies, they are good. But because it is in the bunch of the pharmaceuticals industries, so people have started investing in the mutual funds, which is a composition of the pharmaceuticals. So that's why more and more demand of the market. There are other companies that you have to see that there are companies whose demand is whether only in the domestic market or in the foreign market. I have seen typically a little bit safer if you invest something in a company which has got international market. That means they are much diversified, their customers are all across the world. So if one the economy of one country falls down, then other what you call other consumers are there, they will be recompensated. So if you restrict the companies which has only the domestic market, then it might be a problem. You have to also look some other industries which are not so growing well. For example, coal, power, steel. Steel, for example, if you see that China is one of the largest supplier of the steel, and India is not a largest supplier of the steel. Obviously, the largest supplier of the steel will dominate in the market. Okay, I've discussed about the telecom companies. Now you will see the industry analysis and the sector performance. Industry analysis and the sector performance is the comparative graph, and then is the benchmark index. At some point of time, you will see healthcare was going far above the Sensex. Sensex is the overall mixture of the company, which is the benchmark. Whereas you will see that the FMCG company, one point of time, it was not going so well. So I will also show with the same thing with that. For example, here, if you go, I've already made some chart. Okay, so I've taken a sample of the three companies. Okay, you can add more. Okay. In fact, you can take from this chart BSC. Okay. And say, for example, you want to add the consumer durable. Okay, you can add, say, anything, fast moving consumer goods. So what it will tell you that with respect to one company, how the other companies are growing down, and it has been benchmarked with a one particular deviation, and you can deviate the benchmark. So currently you will see that everything is going up and down, so not much this thing. But in the normal scenario, what it will happen that you will be able to compare. Just a minute. Okay, we have seen that in one point of time, the growth of the consumer durable was much more than compared to the previous one. So you need to invest more. This red one comes, the consumer durable. It was going much faster. So you may consider to invest more in the consumer durable. Okay, that's what I tried to. Now let us go to the next slide. Focusing on the sector. So you may choose diversification in the multiple sector, but actually it is a bad thing. You should see that which sectors are going up and then switch from a bad sector to the good sector. Okay. Fundamental analysis. So fundamental analysis will tell you quantitatively or qualitatively how well a company is doing. Okay, you have to do the analysis of the balance sheet, income, profit. There are certain financial ratios. I will explain. There is an intrinsic value versus market value. And you have to look at the quarterly result. And what it will matter that how the company is progressing and in terms of the increase and the decrease in percentage. Now, here is the typical thing. The first one I have already discussed, that is it bought by the good mutual fund companies. The second parameter, one of the most parameter I have suggested is the return on equities. You should never select companies whose return of equity value is much less. It should be at least 18%. Now, what is the return of equity? Typically, the definition is that you can see that it is a measure of the profitability. It is a net income divided by the shareholders' equity. Now, why is that and etc.? I ask you to do a lot of research because my focus is not to give the definition. I would like you to look into actual parameter that how you'll be segregating. Okay. Now let me look into one or two these things. This is the good thing, screener.in. Okay, where you'll be seeing that there is a company, very famous company, Pidilite Industries. Okay, and you can configure this one, and there are other companies which we'll see. So one is that return of equity will see a value of 24.31%. This value is much more than 18%. You can safely go with this company. There are companies, say Sumitomo Chemicals, something 16.5%, Godrej Industries, 11.9%. I would ask you to avoid such companies. You can say me there is a company called, let's take Available Finance Limited. Okay. You will see its ROE is 14.9%. Okay, it is not a good company. If you compare a good company like a Bajaj Finance company, its ROE is 21.98%. Okay, and so you will see that a good company's ROE will be always better than a bad company's company. Okay. Now, the second parameter is that the reading the annual report. It is very boring, but you will be able to see a lot of things after reading that. Another interesting thing is to look into the sales growth. The sales growth of a company, that means year on year, it should be as high as possible. Now, if I go for this available finance, let's look into. Okay, it is not much data is there. I'll go to another company, maybe this one. This is a Tata Power company. I will come the comparison later on. Now, this is the sales growth. You are able to see. Now, the sales growth of the company, this is a 35,000, 33,000, 29,000. This is on different year. You can see there is not much sales growth of this company. It is almost getting flat. Okay. So this is one of the indicators that this company, yes, it is earning a lot of things, but if I see a progression over last 5 years, there is not much. Okay. So the another thing is the profitability. Now let us look at the profitability. Now you can see the profitability in the month of March. Oh, by the way, profitability, one is the annual and another is the quarter. So the profitability in the month of March 2018 was 2004, but in earlier years, sometimes this company also has gone negative. Okay, and the profitability, sometimes it jumps, sometimes it falls down. Okay. If it suddenly goes down, then you have to be also careful. Okay, the tax the company pays, I will discuss more about the tax later on. But the interest coverage, there is another figure. In fact, how to do financial analysis, there's a wonderful website you can go through, and you can also know a lot of these things. I will visit the website, but before that, another interesting thing is the promoter stakeholders should increase. What is the promoter stakeholder? Typically, the people who have launched the company, they know the companies the most. They know inside and outside of the company. Take example of Infosys, Narayan Murthy, and uh, other personalities. They know the companies very well. So they have holding to the company. That's how they become billionaire. Now, if they start selling the company, that means they found something wrong with the companies, and they will exit from this their own stocks. So promoter stakeholder must not decrease. They must not pledge. Pledge the money means they need money. They will keep the stock with the banks, and that is a bad sign. Okay. So let me go through this one, and then with that I will end the session. This is a beautiful article. You should read this article. This article shows by that how to do step-by-step analysis. In fact, this particular side is dedicated for the fundamental analysis and not good for the technical analysis. And you will know a lot of things, that analysis of a profit and loss-making statement, how to do calculate the profitability. There are a lot of information. You should visit this site and then understand the fundamental things about the fundamentals of a company. So it expresses you all these things. I did not explain in detail. I'll just touch upon, but also you have to be a little bit careful about how companies also inflate the profits. So there is an article also. This is a brilliant article. Typically, in order to show more profit, sometimes the company show the less expenses, so in an illegal way, and by analyzing the balance sheet properly and looking into that where they are showing the expenses, it is interesting thing. You will understand. Okay, so I would now like to stop here, but would like to visit, go ahead, one of those things just to show you. I've compared between two companies, Tata Power and Aarti Industries. Now, just looking into this, you will see that Tata Power is currently selling 29 rupees a stock. Aarti Industries is selling 1085. Obviously, there are factors like a stock split and bonus I have not considered. But looking at this, you will see Tata Power is very cheap. In the last class, somebody has commented about that. Now, look at the ROE. ROE Tata Power is minus 1.4%. Aarti Industries 23.31%. ROC 6.5%, 18.9. Another thing I have not explained is the debt to equity ratio. The company which takes debt, typically infrastructure companies, I don't like this because you have a debt, you have to repay the debt, and there are repercussions of the debt. Because of the debt, the company has to pay a high amount of the interest. So it eats up the profitability because you have to pay the interest, and whatever you are earning out of the selling, large portion goes behind the interest. So the debt to equity ratio should be less than 1. Tata Power is more than 1, 2.46, whereas Aarti Industries is less than 3. You will be seeing the compounded sales growth and the profit growth. Compounded sales growth last 10 years 5.05, 5 years minus 3.72, 3 years only 0.07%, whereas Earth Industries 10 years 12%, 12.4%, 3 years this is and as on today is the 23. So you can now segregate between a good company and a bad. Like that profit growth, if you see, it is a negative profit growth, whereas there is a fantastic profit growth here. The return on equity also, ROE, also changes from time to time. And you will see that if you side by side take these two companies, this company is far better. And you will see that I have also compared the sales. The sales growth is not much here, but you will see their sales growth is steadily increasing. The Tata Power versus Aarti, the net profit, the Tata Power's net profit is varying, is oscillating. Sometimes it goes down, sometimes it goes negative. Aarti Industry profit slowly, it is going up. It's a slow but steady. Okay. Now I don't want to show you the technical analysis, which is the second judgment to pick up a good stock, because I want to stop here, and then next week Friday 6:30 we'll come back. Now I will take few of the questions. Thank you.
Hello, sir. This is Sendil here.
Yes.
So
Yes,
my
Sindhu.
question is like, for example, if I buy a stock for 100 rupees, but I see the market is fluctuating. One day it goes up, one day it comes down. So how much loss should I accept and how much profit that I can accept before I'm selling it?
Excellent question. So the answer cannot be done with the fundamental analysis, and I will show you in detail in the technical analysis. And when you learn this technique, that how much loss I should make and how much gain I should be happy enough so that I can come out of the market, it is purely driven by the technical analysis, and I will tell you. Okay, next class, I think I will go into the technical analysis. Technical analysis, there are two stages. The first stage is that how to select good companies looking upon overall technical parameters. And the second part is that the one that you are taking, that how much loss I should make, how much gain I should make, when I should buy the stock, when I should exit from the stock. Okay?
Okay, sir.
So once I explain you, I need not answer your questions specifically. You will be able to answer by yourself.
Okay, thank you.
Any other question?
Hi, Devanjan, can you hear me?
Yes, I can hear you.
Yeah. So my question was that most of the parameters which you said we should compare before investing or before making an investment decision, what we see on the website or on the internet is a lag data. We see something which has happened 1 or 2 months before. So by that time, the market would already have adjusted. So is this profitable? This analysis, is it worth it?
Yes, it is worth it. I will tell you about the market sentiment, which I have not discussed earlier. The market sentiment will be driven by the quarterly performance of a company. If the last quarter performance is very good, it is unexpected compared to the last one. Example, a company has the profit growth was 5% in the last quarter, and now very recently the quarterly profit has increased immediately from 5% to the maybe 12%. Immediately the market sentiment, wow, the company has done fantastic. There will be a lot of hope. Based on the past data only, the investors will take a decision, because investors do not have any visibility on the future data. Correct? I will give you one example. For example, take example of the HDFC Bank. HDFC Bank, few days back, it has fallen down. Okay, but then so few days back has falling down drastically. But then there was a quarterly announcement. You can see in the search in the Google and etc. And it was fantastic. The day it was declared as a fantastic, from there it has jumped back. Okay. So this is one of the things. The sentiments are driven by the quarterly performance. Okay. And if it is a good, then people will start buying the stock. Okay. Does it answer your question? So only based on the past data of the company, whether the company has done, good amount of things, then only the market will be driven. There's no surprise. You can check historically everywhere.
Hello.
Yes.
Hello, Devanjan. This is Bhavigati.
Yeah.
Actually, I wanted to know about the bullish and bearish. Okay, is
Okay.
it directly related to stock price itself, where the stock price goes up means it is bullish, and where when it comes down next day means it is bearish, like that it is?
Yes. So it is bullish and bearish, but the overall trend can be bearish also. For example, here in this particular day, 13th March, you will see that the stock price opened with some price. It has been up, and so it has closed high. But overall trend is a bearish, because the stock price is falling down. In between, there is a bullish attempt, but which is not sustained. Okay, so you have to see the overall trend and the current trend. Okay, for example, if I see Nestle India overall trend for the last, I would say, let me take whatever, something like it's frozen. Okay. I'll show you other side. So this particular company, if I see overall trend, it is nothing bearish nor bullish. It is moving horizontal. Okay. But if I take the other company, I will take, say, Divi's Lab. This is the overall is a bullish trend. If you see the last 5 years, the stock price is going up and up. In between, there are bearish trade, but again, there are bullish trade. So you can see this stock is a bullish. It is going up.
Okay,
Does
not
it
day by
answer you?
day, not day by day, not
So day by day there will be variation. In fact, within the day there will be variation. Okay. So
Okay.
overall, if you have to see a long-term performance, overall
Okay.
trend of the stock, okay, how it is performing. Okay. And as an investor, your object will be to buy the stock of this is the overall bullish stock, to buy the stock at the dips, because there with the less money you will be buying more amount of the stocks. And how to do it, I will show the technique. Okay, because to you there is a total black box, because on the right side you do not know whether the stock will go up or stock
Yeah.
will be falling. Okay, so there is a technique to do that. I will show you. Okay.
Hi sir, I am Vaibhav Soni. I have one question. Maybe you will going to answer that in technical. So if that is the case, you can skip it. So you have shown the stock price means trend of Adani. Not Adani means you have compared two stocks. So, so in that one was like keep on increasing throughout the 10 years. Also, we have the ROE as a good. So, in these kind of stocks, what you recommend means what should be the strategy? We should be a long time player with that. Keep on investing means every month or something, or every quarter, or it should be for some time only. We should invest and come out.
Yeah. So what I would suggest that for a long-term performer, you should hold the stocks for a longer duration. But I will also tell you one thing, that even if there are some excellent stocks, I mean fundamentally fantastic company, but somehow you will see that it is not catching much attraction among the investors. Like not all good people are recognized in the market, as you know. There may be fantastic people, okay? There may be very good worker in the organization, but for some reason they have not caught much attraction. Okay, so those stocks are not so attractive. So you will be buying only those stocks which are fundamentally solid and also technically solid. Okay, that means ultimately the stock must give you the money. So in that strategy, I would recommend you to hold in the long term. For example, I have invested Bajaj Finance. Okay. And Bajaj Finance currently it is falling down, but over a period of time the stock has been growing. Obviously, it is falling down for some reason because now people will not be able to trade. Ideally, now one should have come out from this stock when the profit fall has started. Otherwise, it is a long-term hold for an investor.
Okay, so one more thing, like so in the long term, you keep on invest with some with time to time in the same stock, or it's
Yeah.
like a
For example, I have invested in Bajaj Finance. I mean, I have a cap of investing. I do not invest more than certain amount, whatever it. So a small amount I keep on investing in a month, say 2 to 3 times, something like that. I pay small. I typically purchase say 5,000, 10,000 rupees of stock over a period of time, not in a one shot. Okay. Even I purchase few stocks in one day. Then next week I will wait another day. Then I will wait whether the market is going up or not. If the market is falling down, I'll wait and wait for the pickup. Whenever it is picking up, I will start investing.
okay.
I just have a question about the economy.
Yeah.
Before you covered the economy and the factors in the economy and how they're going, and I think we can all agree right now that with the COVID, everybody's economy is not doing well at all. I mean, India, USA, China. So does that mean you're currently not investing in the market because the economy is bad right now?
Yeah, definitely. And you will see that a second wave, because you have not seen any the impact of the economy. Now, when in the next quarter, the result of the different companies will come down, may not be Siemens Healthineers will not be falling. Okay, but the other companies, you will see now the impact. Many of the companies will report loss or they will report much less revenue. And then it will have immediate impact on the stock market. The stock market will fall down. It is going to come. Okay. And then thereafter, then people will come back to the normal life. Now we do not know when, maybe after 3 months, 6 months, or even maybe 3 quarters. Okay. Then slightly you will see in the, when it is going to, economy is going to improve. It is going to improve over the long run. And then there will be more demand in the market. The company will make more and more profit, and they will make more revenue. And in that case, again the hope will come back in the market. So again, stock prices will start rising. You will see definitely it is going to come. Okay.
So this is not the time to invest, you mean to say that?
This is for the long-term investor. I would say this is not the time to invest, but I would say if you want a short-term profit, you can play with the market. It is possible to make short-term profit. That's why I also showed you that, okay, how maybe this how it is possible to make the money in the shorter duration, and you can earn a lot of money even within 1 or 2 weeks. It is possible to make money, and that I will show you in the technical analysis. You can play with the market. Okay, so you take immediate sentiment, you watch on the quarterly performance, the results are currently coming out. If you see that the recent the performance of a company is unexpectedly good, that does not mean another 3 months or the next quarter it will be good. But if it is recently good, it will have the immediate impact. For 1 or 2 weeks, the prices will go up. So it is also possible to make short-term money. Don't think for the long term. Long term, it can, maybe it is going up and then again it can start falling down. So you have to again watch the trend. Watching the trend is very, very important in the stock market.
So when we need to look towards the long term and when we look towards the short term, what is the time something?
So there is a definite pattern. I will show you the pattern which will come in the technical analysis. But currently you have to see, now you have to choose the sector. For example, the pharmaceutical sector, you will see that the stocks are doing fine. There is no problem.
Yeah.
Okay. So you will see that last, maybe not this one, the finance company is doing bad. So if I talk about Aurobindo in the pharma, another is Torrent Pharmaceuticals. Okay, it is now going up. Okay, it has, from the price 1779, the price is up by 2550. Okay, so it is possible to make money. If you are in the stock market and then trying to play technically, forget about the long term. So you can start always with the short term. And in the short term, first I told you the knowledge is needed. Okay. In fact, you may not immediately start investing. You can do a shadow practicing. That means take a diary, note down at this price you are purchasing, and then wait for a few days. Say at this price you are exiting. Okay. You write down that I am virtually now buying the stock. Actually, you are not spending from your pocket. You can create a WhatsApp group and you can say, okay, in the WhatsApp group, I post, today I bought this one and the reason for which I am buying the stock is this and this. Once you learn the technical analysis. And then after a few days, I am satisfied with the money. Maybe I am thinking that after a few days, the stock will fall down. And I made some 6%, 7% profit. Okay, that's all, be satisfied. Don't be too greedy. Okay. Once you are greedy, suppose in this point you are greedy at this at the 8th April, and then next day you will see the price is falling down. You need to also know what point of time you need to exit. So there is a formula for that. Okay.
Okay.
Anything else? Question?
This second wave example, what you gave, it's for economy only, or it's for every whenever the market crash?
Which one?
You told like the second wave will come whenever the economy will go drop in next quarter.
Yes.
Can see. So that will be related to every time when the market crash, or it's only related to the economy when?
No. Now it is a typical case. Economy, obviously, it will have the impact because currently whatever is going on. Okay. I mean, it will have now people. I mean, maybe another 1 month, 2 months, people will start coming to that. But already the companies, they have stopped the production. No, nobody is buying anything. Nobody is buying any vehicle. You can see the auto sector will fall down. The sectors which are not going to fall out is the typically FMCG, the whatever we are eating now. Okay, these companies are have been producing. They will not be having much debt. But there are certain companies, for example, the real estate companies. Real estate companies, as you can see, there are migrant workers who are now stopped working. They are leaving, the workplace. There is absolutely the construction across the country or in different countries have fallen down. It has been stopped. Okay. You cannot expect that these companies will be performing much better. They are not able to sell their whatever construction is made. Okay. So definitely in the next quarter, you will see that their productivity is going down. Yeah.
Okay, thank you.
Okay. So
Hello, Debanjanji. Can I ask a question?
yeah.
So is there any filtering criteria for a short term, like, you have different analysis you mentioned about, but there are some analysis you can do for short term investing versus some analysis you can do for long term investment. Is there any data you have about it? Or you can present it in the next time also?
I have presented something, I don't know, one Excel sheet I have shown you, no? What is that? Yeah, this one also kept in the team.
Yeah, if it is already there, I'll look up. I don't remember.
See, yeah, I can show, no? These are the companies. Okay, in the short term, they are going up. In the 2 weeks time, they are going up. You can see. Okay, but in the long term, you will not be finding. For example, say, what is that? Take example, Mindtree. Short term, 24% is going up. I think today, HCL, Hindustan Computers Limited, their result has come out. They have done fantastically. You will see another 2 weeks, HCL stock price will zoom. Okay, because of the sentiment. Now, if you see this Mindtree, I will go for this Mindtree.
No, my question was more of like, for example, if you're going to do short-term investment and get in and get out, would you focus more on the news and the trend rather than the actual analysis of all this technical and fundamental, right?
Exactly. But I would say it is always safer to go for the fundamental analysis because the fundamental analysis, the risk is much less. Maybe temporarily you are losing the money, but in the long term, it will always happen. See, we all are pressurized in the work. I don't know. I mean, I have to spend at least minimum. In the during the daytime, I don't have any time. Okay, while I work in the office, I can only buy or sell the stock during my lunch time. I just sit with my mobile. On the right hand, I take the foot. On the left hand, I'll start buying or selling the stock. Okay, and it will take me just 10 minutes because last night I have taken the decision. Okay, so I don't really look what is the current price and etc. I just execute the decision that I have done in the last night. Okay. So my question is that we are all professionals. We cannot spend a lot of time behind the stock market, and you cannot look at the data on the day-to-day basis. Now this is our challenge. So generally, sometimes you may miss also because when you have to be in the short-term player, you have to be very, very alert during the short time also. Okay, sometimes not twice in the week, sometimes maybe on the day-to-day basis you need to keep on the stock, and which will also mentally affect you. It will create a tension and the pressure, and also the psychological emotion. So I would advise that first go for the fundamental analysis. If there are really good companies, you can rest assured that temporarily it is falling down, but ultimately this company will come up. That is the key message. So doing the fundamental analysis always will assure you in the long run you are not the loser. In the short term, yes, there can be certain disturbance. That comes with everyone, correct? So like the mind tree, see that long-term performance, it is not in my top list. Okay, maybe 3 year that's gone this one, 4 year, 5 years. The see 4 years it is the rank of the 63. It is not one of the top most. So I can invest, but Mindtree is not one of the stock that will be giving long term. Rather, I will prefer the IPCA lab. IPCA lab, I will see the long term gain is much more. And then I will do the fundamental analysis. So I have to switch between the technical and the fundamental. Technically, whatever is good, I have to do more on the fundamental analysis. If both are okay, I can be rest assured that I will not be loser. Okay?
Okay, thank you.
Any other question?
Sir, whenever you mention short term means how long time you are mean to say, means it's a 1 week, 2 week or a month?
There is no strict definition. Okay. What I will request you initially to keep a target of 3% per month. And that is not my statement. I think the Adam who has given a beautiful, I just go in that YouTube, you search. There are some beautiful things. Okay. He has made a lot of presentation. Okay. I have shared one of the things. I mean, I have saved it. Just a minute. I've saved something, but if you see this one, Adam Q has made a lot of good video. I will share some of the video. Okay, and they are quite good. I mean, he has made it very clear that okay, you can do a short-term profit, and you need not have a lot of things to run. Yeah. Any other question? Then I will stop the recording and then end the session. And you can also ask the question in the Yammer or maybe somewhere else so that people can also learn about that. I will try to answer. In the stock market, nothing, I mean, no question is what you call not so good question. We learn and we learn continuously, and with the learning we can earn a lot of money. Okay, I have made a lot of money. Okay, and I believe that you can also make a lot of money. Initially, I lost a lot of money, but I did not stop there because I did not know the subject, frankly speaking, and nobody taught me the subject. But once I started learning, it is a fantastic area, and you will see that this is like a game. This is a very interesting game. With this game, that game has got their own thrilling, and you will be thrilled in the stock market, number one. But also you will make money. In the long run, it is making the money. Okay? So that's it. And thank you very much. I hope you can join also the next week. Okay?
Thank you.
Thank you.
Thanks.
Thank you very much.
Thank you.
Okay, bye then. Yeah.
Bye.
Thank you, sir.